What's good, y'all? Welcome to another episode of Cheef and Chart, brought to you by Rap and Dough. You know, the home of money conversations. Talk all things black wealth. Cheef and Chart, we talking charts, we talking options trading. For all y'all aspiring options traders and investors, listen here. We offer solutions to our issues. Like I said, we talking all things black wealth. So that entails the solutions. And this is one of them, options trading. So y'all was tapped in yesterday. Y'all know the deal. So make sure y'all hit the like, subscribe, and notification bell so y'all know when it's showtime. But this is episode Tropicana Cookies. Yes, sir. Fresh off the presses. Because that's what I'm cheaping. And like I said yesterday, if y'all smoking weed, watching my show, y'all better be making money off weed. And today, I'm going to not only show y'all what happened, what I said from yesterday, what transpired today, but I'm going to show y'all how to trade. I'm going to go through the same things I've been going through, but with a weed company. You feel me? So that's what we're going to do today. So I don't want to hear no excuses. Y'all in here smoking weed with your rent money. That ain't what we're doing. We're using assets. Using assets to pay for our liabilities, okay? But before I get into the charts, though, what I said this episode was Tropicana Cookies. I forgot the subtitle, but you'll see it in the description. But what I want to say is you gotta have patience. Gotta have patience. I don't know what's going on. People will fly by you in traffic and y'all be at the same red light. Like, people will be just in a rush to do nothing. So that'll spill over. If you one of them type of people, I'm gonna need you to woosah, man, because that's not gonna work when you're looking at these charts and you're trying to print this bread. We're gonna need to exercise a little bit of patience. You dig? But if y'all was tapped in yesterday, like I said, y'all know the deal. We had momentum divergences going on. The SPY was going to the downside. So y'all know if we keeping our eye on the SPY, a lot of times out of 10, the rest of the companies are going to be going down too. But if you tapped in the Cheef and Chart, you kind of got an idea what's coming. So not only did it follow suit, because this where we was at yesterday. Let me make the screen bigger. Follow my cursor. This dot right here. So this red bar here was yesterday. And we had downward momentum. So I said, tomorrow we're going to open up down. But not only did we open up down, we gapped down. Y'all see this gap right here? Like, it ain't just inch down, like it gapped down. So that offers an interesting positioning situation, because people will attempt to try to get in on the immediate drop below get into puts right below the level. But if y'all pay attention, y'all know it's a lot of volatility at important levels, obvious levels that everybody see. So it's a good idea to wait for the market to digest that gap down. And the same thing to the upside. If something gaps up, wait for the market and your signals to normalize a little bit. So I did just that. I waited a little bit to see what the SPY was going to do. But first and foremost, I took profit, because if this gapped down, my stock that I was playing gapped up, because y'all know I'm playing a stock that's in opposition to the SPY. So let's check that out. So See how the SPY gapped down, mine gapped up, right? So I was in calls. So I had 4 contracts. So what I did was um, I sold two. And no, that was the other play I was in. I was in 2 plays. I was in GoPro and this one. So I sold 2. Make sure I'm telling the right facts here. Yeah, so I sold 2. No, I'm sorry, that was GoPro. I took profit here, right? And I waited for the market to settle because it's above this level. So it's going to the next one, which is 26. All right. The next level was the next level up where price went and stopped before. So it's around this area. This is a level. So being that it's that's where it's positioned to go now because it done broke through a level. Now I waited for it to show some weakness in this strength. So if you look down here, we have the fast line on the MACD with strength. I needed to see this weakness so I can get in to position for this next level up. All right. So I dropped down into my trading time frame, the 2 hour, and I see the weakness. So here's the bust through right here, because in the daily you can't see what's going on in the daily until you drop down into a trading time frame. You have to pick one. Mine is 2 hour though. So in the 2 hour time frame, I see 4 bars that represented 1 bar in the daily. So now this is the bust through bar. Right? This is the bust through bar. And here's the weakness. This is my positioning because see, it's falling to a level here. So this is where I got back in. I'm back in because why? We still have strength in the MACD. On the trading time frame, it's curving a little, but the slow is straight up. So I like it. It didn't curve down yet, right? So on the daily, look at the daily. Look, compared to back here, this is a new high. And here's the weakness. So we're buying this weakness. So we're dropping down to the trading time frame to see where we're getting in that weakness. So here's the 2 hour. That's where I got in towards the end of the day. Because I like it. It's sitting on top of this other level, this half an hour level. It's sitting on that. So I like it. I like it for a bounce. I like it for a bounce to where did I say? 26. This area here. And I took it for 15 days out. So I took profit, like I said, from the day before. And I waited for weakness in that strength and hopped back in. See the strength, new high in the MACD, and weakness. So I was looking for this weakness so I can get a better positioning for the continuation. So that's that play, and here's GoPro. So GoPro follows the SPY. So being that the SPY was down, like I said, a lot of times out of 10, your stock will be down too. So I positioned for puts yesterday. If y'all familiar with options trading, you can make money when the stock goes up or down, depending on what kind of contract you buy. So puts are contracts where you profit when the stocks go down. Calls are contracts you buy if the stock goes up. Just a refresher for any beginners or first timers here. So if we're positioning for puts now, we need to find strength in this weakness. So yesterday we were here, the 15th, right? This red bar. So when it bounced off of, y'all following my cursor, right? When it bounced here yesterday, when I was checking for it, it was I was looking for some weakness after this bounce. So let's go to the trading time frame, the 2 hour, so we can see really what's going on. So the 15th yesterday, so boom. 14th, so boom, it did this. By the time I was checking for it, it was doing this already. And I seen that the market was down. So I said, oh, it's going to retrace. So where did I get in? I think I got in right here. So it started dropping already. So I said, let me find some strength in this weakness. Here's the strength. So I bought puts here with a 550 strike price because I knew the next level down on the daily that I'm trying to position for is down here. Where's the 15th? So if this was yesterday, I was thinking the next level that I'm shooting for is down here at 539. So I did a 550 strike price, 15 days out. So I said, okay, if the next level down is 540, I'm gonna just do a 550 because it got to pass 550 to go to 540, right? So I went to the 2 hour and I said, boom, I grabbed it right here. I found this strength because I was waiting. I was waiting for it to pull back because it has to retrace, right? It can't just fall straight down. It has to retrace. That's natural price action. As it goes down, it retraces a little, down, trace a little. And on the way up, it goes up, retrace a little, up, retrace a little. So you want to find that weakness in that strength on the way up. On the way down, you want to find the strength on the way down. So here's the strength that I positioned for the down. So this morning, it was down here. So I ain't expected to happen that fast, but so I took profit on 2 of the 4 contracts. And being that I see it still going down because the SPY still has room to fall. So I said mine must have room to fall because it just broke this level here. So now it has that level to contend with because what happens after support is broken? It now becomes overhead resistance, right? Once support is broken, it's now overhead resistance. So it broke it, and now it's trying to retrace and test it. That's resistance now. So I'm looking for pullback here because on the daily, we have a new low, and we see strength. So we want to buy this strength because this is better positioning so we can position for the next level down. So here it is. That 1 bar back here in the daily, this 1 bar here is skinny. Well, drop down to the 2 hour. This is what's going on in that skinny bar. All right. This right here. So I'm looking for this to reject 3 or more bars. You need to be leery anyway. So here go 3 bars. So I'm looking forward to test this line here and finish falling. And I got that cooking over the weekend. I still actually, yeah, I only took, like I said, I sold 2 of the 4 contracts, so I'm letting the other 2 ride. You know what I'm saying? So now the profit that I took equal plus profit what I spent on the 4 contracts total. So selling 2 contracts this morning covered what I paid for the 4 and some profit. So now I have 2 of those 4 still cooking. So now it's house money that I'm going to make more money on. This is the beauty of options. So now I have 2 plays cooking. I have the one that's opposition to the SPY cooking, and I also have this cooking. So hopefully that gave y'all some nuance into multi-time frame analysis, which is my bread and butter, because it just gives you precision with your trading. You can't see everything in the daily bar. You have to pick a trading time frame, and then you're relatable. The relatable time frame, you will be dividing your trading time frame by a multiple of 3 to 5. 3 to 5. So that's why my relatable is the half an hour. So my trading time frame is the 2 hour. I divided it by 4 because that's one of the numbers between 3 to 5. And because you want to keep the math easy, right? So that gave me a half an hour. So the half an hour is a way to see what's going on, see the integrity of my 2 hour bars. So each bar here is 2 hours, right? Now I can see what's going on inside of the 2 hour bar, right? You can see like, okay, boom, this is going up. How far is it going to go up? Well, we can guesstimate that it's going to go up to this time frame's resistance. This time frame's next resistance is 567. So you wouldn't have been able to see that if you was looking at the 2 hour. So that's how you can see how long it's going to go, how much strength it's going to give you. Like, because we're positioning for puts. So you drop down into your relatable to see how much strength, like how far up is it going to go? How much of a better position are you going to be able to get, right? Because we're looking for strength and weakness. And if you see a level approaching, you can guesstimate that that's the level that it's going to stop at. So you can be like, okay, I'm going to start buying my contracts here, like somewhere in between here and the exact level, right? You always want to do things before the level, whether selling or buying, because it's a lot of volatility in that area. That's a gem for y'all. You want to be buying before the level or selling and taking profit before the level. All right. So this is the benefit of dropping down to your relatable time frame. You get to see exactly how, you're positioning with your buy. Like, okay, all right, this is where I want to get the puts because that's the next level that it possibly may stop going up at. So that's all I got for y'all today. Hopefully y'all had a dope trading week. Truth be told, man, I gave y'all a lot of heat on here. So make sure y'all hit the like, subscribe, and notification bell when I go live. Do your studying. As a matter of fact, if you want to learn how to do this officially, hit the description. As a matter of fact, yeah, you can hit the description. It's in there. And yeah, intro to swing trading is in there. All right. So with that being said, I'll see y'all Monday or in these internet streets. And always remember, there is no competition. It's only you versus you. See y'all on Monday.